Hey everyone, I'm Bradford with the Penny Pincher's Guide to Personal Finance. Whether you just started driving for Uber, are renting out your house, or finally started the business of your dreams, congratulations, you are now a small business owner. With that in mind, you need to become familiar with the Schedule C of the IRS Form 1040. This is how you're going to report all of your business expenses, revenue, and deductions for tax purposes. Let's jump into the Schedule C and see how you fill it out. So here we have the Schedule C for Form 1040 for the 2021 tax year. Start from left to right, top to bottom. I'm going to walk you through how to fill it out. The first part is going to be the name of proprietor. That's going to be you. Then we're going to enter your social security number. The next part, A, your principal business or profession. Plain English, what is your primary business activity that you're doing? So in this one, I'm basing the business off the one that Chase and I have as a partnership, but in this example, as a sole proprietorship. So I'm going to say it's a content creator on YouTube. B, enter your code from the instructions that corresponds to your business activity. So if you go to the Schedule C instructions, which I have linked down below, if you go to the very bottom, it's going to have a large list of various business types and activities along with the corresponding code. Find the code that best fits your business activity and then enter it into box B. C, business name. If you don't have one, leave it blank. It's not required. D, your employer identification number, or EIN. Most sole proprietorships are not required to have one of these. If you have any questions as to whether or not you do, reference the Schedule C instructions, and it lists out what type of business activities are required to have an EIN. The majority of people, it's not required, so you'll leave it blank. E, business address. If you're just starting out, more likely than not, it's going to be your home address that you'll put in here. F, accounting method. Majority of people are going to use cash. Accrual is based on when you receive and send invoices as opposed to cash, which measures money as it enters and leaves your banking account. G, did you participate in the operation of the business? Most people are going to say yes. H, did you start the business during 2021? If last year is the first year you started this business, it'll be yes. If not, leave it blank. I, did you make any payments in 2021 that would require you to file Forms 1099? Reference the instructions. In this example, we're going to say no. That was not a requirement. Kind of general rule of thumb is if you pay somebody as a contractor in excess of $600, you are going to be required to issue both to that individual and the IRS a Form 1099. J, this one's pretty stupid. It basically says, if you did say you are required to file a form, are you going to do it? So if you did say yes, this should also be saying yes. If you're saying no, you're basically telling the IRS, I am going to break the rules. Please audit me and fine me. Continuing on, Part 1, income. 1. What are your gross receipts and sales? How much money did you make for the previous year? This example, we're going to say John Doe made $5,000 off of Google AdSense. Awesome. Returns and allowances, not applicable to most people unless you're operating a retail store where people are actually able to return items. So if 2 isn't applicable to you, just take line 1, drop it down to 3. And then 4, cost of goods sold. This is going to be based on a worksheet you fill out on the next page. We're going to say it's $250. Then you're going to subtract the cost of goods sold from the gross receipts and sales that you had, and that's going to give you your gross profit of $4,750. Next, 6, other income, including federal and state fuel tax credits and gasoline tax credits, not applicable to the majority of people, so I'm leaving it blank. 7, gross income, you're just going to add up 5 and 6, and that's going to give you $4,750. Continuing on to expenses. The instructions do a really good job of breaking exactly what is considered for each of these lines in detail. I'm going to quickly skim over it. Advertising. Are you paying for advertising for your business? Car and truck expenses. Are you running a landscaping business where you need a truck to be able to bring your lawnmowers around to various yards? Commissions and fees. Do you have a sales team and you're paying them a commission? Contract labor, that deals with the 1099, paying somebody else regardless of whatever the activity is. Depletion and depreciation. So depletion I'm kind of going to skip by, but depreciation, so it deals with Section 179 expenses. All right, big thing here is you should be able to, so in this example it's saying spend $2,000 on camera equipment, lighting, a microphone, big things to be able to start up as a YouTuber. We're going to be able to deduct all of that in the first year we bought it, as opposed to being forced to depreciate it over time due to Section 179, which does require an additional form that has to be filed to be able to depreciate it all in year 1. But if you make less than $1 million, you should generally be able to depreciate all of your expenses the same year that you get them if they qualify. So you need to reference Section 179 as to what you can depreciate all at once and what you cannot. Continuing on here, Employee benefit programs, if you don't have employees, it's not a factor. Insurance other than health. Interest, breaking down both by mortgages, so if you have property, and other. You took out a loan to be able to buy a piece of equipment. Legal and professional services, did you have to hire a lawyer to look over a contract? Office expenses, that's going to be things like postage. Did you need paper and ink for your printers? Pension and profit sharing plans. If you don't have employees, most likely not a factor. If you are dealing with a pension, you definitely need to be hiring a CPA and not filing these yourself. Rent or lease, whether it's vehicles, machinery, and equipment, or other business property, that's going to go in here for 20A and B. Repairs and maintenance on that equipment, it's going to be 21. 22 is going to be supplies, not included in part 3. That's going to be on the next page that we'll address in a second. Taxes and licenses. Are you a realtor? Do you need to renew your license every year to be able to continue practicing? And then 24, A and B, is going to be travel and meals. Travel, big thing here is you're paying for gasoline while you travel. You can either break it down into your exact expenses, or you can take the standard mileage deduction of 56 cents per mile. I'm just using round numbers for ease here, saying drove enough to be able to deduct $100 worth of expenses. And then also meals. Meals, all the way up through the end of the year, we're going to be able to deduct 100% of the cost of business meals. Now, you can't just use this to be able to go out for a nice steak dinner every night, but if you're doing something that involves business and you need to have like a business meal with somebody to discuss what you're doing, whether you're interviewing them or you're just trying to set up a further business proposition with that individual, that is a meal that you would be able to discuss. In this example, we're going to say spend $200 to be able to meet up with different people that are trying to interview for the YouTube channel. Utilities, that's going to be like gas and electric. Wages, if you don't have employees, it's not going to be a factor. 27A, other expenses, which again, we're going to get to on the next page momentarily, and then we'll bring it back up. And then B, reserved for future use. Don't put anything in that section. So 28, total expenses. So you're going to add up lines 8 through 27A, which here is going to be $2,300. You're going to subtract that from the gross income that you had up here. And for this, it's going to give us $2,450 of a tentative profit. Continuing down here, we're going to be able to take off some additional expenses due to home use as a business. So there's a really good worksheet that walks you through on these Schedule C instructions as to how you're going to come up with these numbers. But probably the most applicable thing is going to be the home office deduction. So you can deduct up to 300 square feet. And in this example, we're going to say we took 100 square feet for a 10 by 10 room. And for each square foot, you're able to deduct $5. So this example, 100 square foot office space, taking the standard simplified deduction, means $500 can be deducted for that home office space. We're going to subtract that from our tentative profit, and that's going to give us our net profit or loss of $1,950. Now, in your first year of business, there's a lot of businesses that have taxable losses in the first year, and that's what 32 deals with. So you need to reference the instructions if you do have a taxable loss to understand what all investment is at risk and what some investment is not at risk actually qualifies as. So continuing on to the next page, cost of goods sold. See the instructions. The biggest thing here is dealing with how you're required to inventory your items. If you are considered a small business taxpayer, which there are specific rules in the Schedule C instructions as to who is and who is not considered a small business taxpayer, but a good guideline is if you make less than $26 million of gross revenue each year over the past 3 years, then you will be considered a small business taxpayer. So in this case, somebody starting making money on YouTube definitely is going to be a small business taxpayer. So basically, you're going to break down here, what are the costs of goods sold? If you are selling t-shirts, how much did it cost for you to get the ink to print on the t-shirts and the actual base cost of the t-shirt itself? That's going to go in here. You're going to break down what was your inventory at the beginning of the year. In this example, there's no inventory, but we are going to be taking a $250 expense for editing software that we have to pay for every year, as well as in this example, say Microsoft Office with the annual lease that we have to pay to be able to use it to write up scripts and make thumbnails, stuff like that. So purchases are going to be less the cost of items withdrawn for personal use. So what did you have to purchase for these cost of goods? If you have any personal use that you got from this cost of goods, you cannot include it. Cost of labor, not anything that you paid to yourself. So if you had to pay somebody to move something, that could go in here. Materials and supplies, this is going to be that editing software as well as Microsoft Office, $250. Any other costs that you might have for your cost of goods sold. 40, you're going to add up lines 35 through 39. For us, it's just going to be 250. And then 41 is going to be inventory at the end of the year. You can't deduct that because you still have it to be able to be sold. So you're going to subtract 41 from 40, and then you're going to enter that result here in box 42, as well as on line 4, which we addressed on the first page. Now, continuing on, part 4, information on your vehicle. So this part's only going to be completed out if you use your vehicle for your business expenses. Touching on that example I brought up initially of if you're a landscaping business and you need to have a truck to bring around your different vehicles, your lawnmowers, your edgers, stuff like that, this is where you'd be able to deduct that specifically. So you need to say, when did you first place that vehicle in service of your business? What are the total number of miles you drove in 2021 for both your business, whether it was just commuting back and forth to the business and other? Was your vehicle available for personal use during off-duty hours? Yes or no? Did you or your spouse have another vehicle available for personal use? Yes or no? And then 47A and B is, do you have evidence to support your deduction? If you do, is it written down? This is really important to be able to differentiate what was for personal use and what was for business use. Now, if you ever get audited, that's where it's going to be really important that you have everything and a very good paper trail on hand to be able to show the IRS that you're doing things correctly. And then continuing on here, part 5, other expenses. So anything that wasn't addressed in lines 8 through 26 or line 30, you're going to throw it in here. I'm not quite sure what sort of expenses you would be, but if you feel like, hey, I have this expense and it didn't really fit well in any of these other boxes, list out what was the type of expense and how much did it cost. Then you're going to total all of your other expenses, enter it in line 48, as well as come back up here and enter it on line 27A. And at that point, congratulations, you have filled out your Schedule C, and you're going to be able to take the information from your Schedule C and enter it onto your IRS Form 1040. Awesome. Now that you know how to fill out Schedule C of IRS Form 1040, if you ever decide to expand your business and include partners, you're going to need to become familiar with IRS Form 1065 because that's what you'll fill out instead, and we have a walkthrough for that right here. I want to thank you for joining me today, and until next time, just remember to pinch a little.